Hello. Welcome to JKO News, where you get more facts and less opinions. This is the Week in Review, for the 20th to the 24th of February 2023. Russian President Vladimir Putin declared Tuesday that Moscow was suspending its participation in the New START treaty, but not entirely withdrawing from the pact yet. New START's official name is the Treaty between the United States of America and the Russian Federation on measures for the further reduction and limitation of strategic offensive arms. The New START Treaty, signed in 2010 by U.S. President Barack Obama and Russian President Dmitry Medvedev, limits each country to no more than 1,550 deployed nuclear warheads and 700 deployed missiles and bombers. The agreement envisages on-site inspections to verify compliance. Speaking in his State of the Nation address, Putin also said that Russia should stand ready to resume nuclear weapons tests, if the U.S. does so. This move would end a global ban on nuclear weapons tests in place since Cold War times. Putin accused the U.S. and its NATO allies of openly declaring the goal of Russia's defeat in Ukraine. Quote, "They want to inflict a strategic defeat on us and try to get to our nuclear facilities at the same time. In this context, I have to declare today that Russia is suspending its participation in the Treaty on Strategic Offensive Arms." End of quote. The Russian leader also highlighted the issue of the nuclear weapons of Britain and France, that are part of the alliance's nuclear capability, but aren't included in the U.S.-Russian pact. Russia and the U.S. have suspended mutual inspections under New START since the start of the COVID-19 pandemic, but Moscow last fall refused to allow their resumption. Putin on Tuesday alleged that Washington has rejected some Russian requests for visits to specific U.S. facilities. Quote, "We aren't allowed to conduct full-fledged inspections under the treaty. We can't really check anything on their side." End of quote. The Munich Security Conference occurred between the 17th and the 19th of February, and gathered heads of state, generals, intelligence chiefs and top diplomats from around the world. With war raging in Europe, the world's foreign policy elite is on edge, and Russia's war in Ukraine dominated discussions. President Volodymyr Zelensky of Ukraine set the tone of the three-day conference, by urging Western leaders to act rather than talk, calling for the speedy delivery of weapons. This year, the U.S. made its presence at the gathering felt with a record number of delegates. U.S. Vice President Kamala Harris used her speech to accuse Russian forces and their superiors of crimes against humanity in Ukraine, saying that was the conclusion of an investigation by the State Department. China's top diplomat Wang Yi also dedicated most of his speech to the conflict in Ukraine, stressing he was deeply worried about the long-term effect of this war, and warning against the return of a Cold War mentality. Wang called for peace talks and asserted that some forces have no interest in seeing the war end soon because of bigger strategic goals than Ukraine. Blinken and Wang sat down together on the last night of the conference, in the first high-level meeting between the two countries since the U.S. shot down an alleged Chinese surveillance balloon. While Wang Yi called for peace in Ukraine, Europe's leaders committed to investing more in weapons. European Commission President Ursula von der Leyen said member states must work together with the defense industry to scale up the production of munitions for Ukraine. This year, for the first time since the 90s, Russian officials did not receive invitations to the conference. Organizers also excluded the Iranian government officials because of Tehran's brutal suppression of protests. The retail giants, Walmart and Home Depot, shared full-year guidance that disappointed investors. Walmart's projection predicts adjusted earnings per share of $5.90 to $6.05, which came below estimates. Net sales are predicted to grow between 2.5% and 3%. Home Depot reported its earnings for Q4 2022 and missed Wall Street's revenue expectations. Moving forward, the company expects sales to be approximately flat for the new fiscal year. The slowdown in the housing market also contributed to lower-than-expected results. According to the New York Federal Reserve Bank, credit card balances in the U.S. hit a new all-time high of $986 billion. Americans continue to spend, but both Walmart and Home Depot expect spending to stay flat or decline. As prices continue to increase, it is unsurprising that spending would fall among discretionary income. Now, let's go for the economic indicators. Personal income in the United States rose by 0.6% from a month earlier in January 2023, but missing market expectations of 1% growth. The increase in income was led by rising compensation, reflecting private wages and salaries in both services and goods-producing industries. Disposable personal income surged 2.0% in January. Personal spending in the U.S. jumped 1.8% month-over-month in January of 2023, rebounding from a downwardly revised 0.1% drop in December, and beating market forecasts of a 1.3% rise. Within goods, the increase was widespread and led by motor vehicles and parts as well as other non-durable goods such as pharmaceuticals. Within services, the largest contributor to the increase was food services. After adjusting for changes in prices, real personal spending rose 1.1%. The University of Michigan Consumer Sentiment, for the U.S., was revised higher to 67 in February of 2023, the highest since January 2022. Meanwhile, inflation expectations for the year were revised lower, to 4.1% from 4.2% in the preliminary estimate, and the 5-year outlook was unchanged at 2.9%. The Personal Consumption Expenditure Price Index, in the United States, increased by 5.4% year-on-year, in January of 2023. Prices for goods were up 4.7%, and prices for services increased 5.7%. Food cost went up 11.1%, and energy prices increased 9.6%. Compared to the previous month, the PCE price index rose by 0.6%, the most in 7 months. Core PCE prices in the U.S., which exclude food and energy, jumped by 0.6% month-over-month in January of 2023, the most since August. The annual rate is the Federal Reserve's preferred gauge to measure inflation, and it rose to 4.7%, backing signals from Fed policymakers that interest rates must be higher for longer to tame unsustainable price growth. The ISM manufacturing PMI fell to 47.4 in January, the lowest since May 2020, at the height of the COVID pandemic. This is the third consecutive contraction in factory activity as companies slowed outputs to better match demand in the first half of 2023. Further declines were seen for new orders, production and backlogs of orders. Existing home sales in the U.S., which include completed transactions of single-family homes, townhomes, condominiums and co-ops, declined 0.7% to a seasonally adjusted annual rate of 4 million in January of 2023. It is a 12th straight month of decreases and the lowest reading since October of 2010. The inventory of unsold existing homes grew from the prior month to 980,000 at the end of January, or the equivalent of 2.9 months' supply at the current monthly sales pace. Now, a quick walk around the markets. WTI crude futures fell more than 1% to around $74 per barrel on Friday. Recession concerns offset prospects of tighter global supplies. The latest EIA report showed that U.S. inventories rose by 7.648 million barrels in the week ending February 17, the highest level since September. Keeping a floor under prices, Russia announced its plans to cut oil exports from its western ports by up to 25% in March. On top of that, investors expect China's oil imports to hit a record high in 2023 amid rising demand for transportation fuel and as new refineries come online. The U.S. benchmark is poised for a second straight weekly loss, down over 3%. U.S. natural gas futures rose to above $2.40 per million British thermal units on Friday, a 5% weekly gain, on expectations that demand for heating will increase due to colder temperatures. Also, the latest EIA report showed U.S. utilities pulled 71 billion cubic feet of gas from storage last week, slightly more than market expectations. Nevertheless, the U.S. benchmark is down more than 45% since the beginning of the year and is over 80% below the August peak of $10, as warmer winter kept heating demand subdued and stockpiles well above average. For the week, the Dow dropped almost 3%, marking the fourth straight losing week. The S&P 500 lost 2.7%, its worst week since December 9. Finally, the Nasdaq ended 3.3% lower, notching its second negative week in 3. On the corporate front, Boeing shares fell 4.8% after the company said it has temporarily halted deliveries of its 787 Dreamliners. Equities in London extended losses into a fourth session on Friday, with the FTSE 100 recording a 1.4% weekly fall. Rolls-Royce surged more than 4%, while energy majors Shell and BP were also among the top gainers, up roughly 1% each, as oil prices extended gains for a second session. In corporate news, German chemicals giant BASF flagged a decline in annual earnings, and announced plans to cut 2,600 jobs and halt buybacks. French construction materials company, Saint-Gobain, rallied after posting record annual revenue that exceeded analysts' expectations. Radiation therapy equipment Elekta jumped after its Q3 earnings beat forecasts. On the data front, German consumer sentiment improved for a fifth consecutive as energy prices drop, while the Q4 GDP contraction in Europe's largest economy was steeper than previously estimated. For the week, the Stoxx 600 lost 1.3% and the DAX 40 dropped 1.4%. The yield on the U.S. 10-year Treasury note, seen as a proxy for global borrowing costs, went above 3.9%, its highest level in 3 months, due to expectations that the Federal Reserve will raise interest rates to a higher level and keep them restrictive for a longer period. This is the current yield curve. The dollar index rose to above 105. On the week, the DXY is up 1%, on track for a fourth consecutive weekly gain. The dollar has also benefited from safe haven demand, due to growing geopolitical tensions between the US and China and the war in Ukraine. Bitcoin traded close to $23,000 this Saturday, February 25th. Looking back, over the last 4 weeks, Bitcoin lost 0.5%. Over the last 12 months, its price fell by 41%. Gold sank to below $1,815 per ounce on Friday, a 1.5% decline on the week, to its lowest level year to date. Hotter than expected economic data added to worries of aggressive monetary tightening. Higher borrowing costs for a longer period of time increased the opportunity cost of holding non-interest-bearing assets such as bullion. Silver futures traded below $22, hovering close to the near 3-month low of $21.60 touched on February 16. Tight monetary settings also hampered demand for the metal as an industrial input for goods with high electricity conduction needs, mainly reflected in the aggressive declines in solar panel equities. Still, low stockpiles of main commodity exchanges limited the decline for silver. Opinion section. The relative strength of the dollar is rising, as well as bond yields, putting stock markets under pressure. It seems that the bear market rally is coming to an end, thus it may be wise to limit your exposure to equities. Some signals of the weakening economy are on the horizon, with rising consumer debt, pressure on corporations, slowing manufacturing and lower home sales. Good luck. Next week, in the U.S., appearances from several Fed officials will be in the spotlight alongside the ISM PMI's release. Investors will also follow GDP growth figures for India, Australia, Canada, Brazil, Turkey, and Switzerland, PMIs for China and preliminary inflation data for the Eurozone. Have a nice week. If you enjoyed this video, please like and subscribe. The contents of this video are for information and education purposes only. The viewer is advised to verify the cited sources.